All right, good evening and welcome to HUECU's Personal Finance Summit 2021. We are just so grateful that you all could be with us today and hopefully in the days to come. This is day one of our summit and we are looking forward to each of our webinars throughout the rest of the week. My name is Sarah Scruggs and I am the Community Engagement Specialist at Harvard University Employees Credit Union. I also have Migdalia Gomez on with me, HUECU's Community Engagement Manager, as well as the moderator for our Q&A time. Harvard University Employees Credit Union is proud to be Harvard University's not-for-profit financial institution, serving our community with customized products, services, and financial education, such as our Personal Finance Summit. Our sessions are being recorded and will be shared via email at the end of the week, once all of our sessions are done. Please feel free to share these recordings with those in your circles who you believe could benefit from them. Throughout today's presentation, please do not hesitate to chat in or type in the Q&A box any questions you might have for our experts. We expect to have about 10 to 15 minutes for questions toward the end of our session. We also have a survey that will be shared in the chat, so please let us know your thoughts on the session so we can continue making these programs a success. If you do fill out the survey, there will be an opportunity to be entered into an HUECU swag box giveaway. For today's session on simplifying financial goals, we have two wonderful partners from GreenPath Financial Wellness joining us. LaDonna Cook is a Client Services Manager at GreenPath, where she oversees a diverse team located in areas spanning from Nebraska to Idaho, Montana, Arizona, Nevada, and California. LaDonna is passionate about financial wellness and making an impact in historically marginalized communities. She's excited for the opportunity to work with Harvard University Employees Credit Union and its members for this year's Personal Finance Summit. Matthew Gage is a Partner Experience Manager at GreenPath. He manages partnerships with credit unions in both Massachusetts and California. Prior to working with GreenPath, he worked at a credit union where he helped develop financial wellness initiatives in the Toledo, Ohio area. One of Matthew's yearly highlights is speaking to the Harvard community. We are glad both of you are here today, and I will go ahead and hand it over to you all to get us started.
All right, thank you, Sarah. Thank you everybody for joining us today. LaDonna and myself here. Like Sarah said, my name is Matthew Gage. And I'm with GreenPath Financial Wellness, and I have with me LaDonna Cook, and she's also with GreenPath. LaDonna, could you tell everybody a little bit about what you do at GreenPath?
Absolutely, and thank you for the intro, both Matt and Sarah. Certainly, so my role at GreenPath is to help to develop, support, and train the financial wellness experts. And those are the individuals who talk to our clients that call in about their financial situations, their goals. And actually, I used to work as a financial wellness expert myself. I spent many, many years in that role, and it is near and dear to my heart. And I'm really happy to be here today to talk you through a little bit of what we talk about when we talk with our clients.
Yeah, absolutely. And my name is Matthew Gage, and I am a Partner Experience Manager, and I manage the relationship between GreenPath and Harvard University Employees Credit Union. Basically what I do is I do a lot of this stuff, which is awesome, and I also make sure that Harvard has everything they need, and in terms of financial wellness and being able to get that out to its members, and that could include financial education content, things like today. It also can include our one-on-one financial counseling that LaDonna had mentioned there. And the funny thing is, and I'm happy LaDonna's here today because we were both actually on the phones, kind of during the same time. We were both financial wellness experts. We were both having conversations about financial goals and about credit and budgeting and all that stuff. And that's a lot of what we do at GreenPath. We're a nonprofit. We're based out of Detroit, Michigan, and we provide that one-on-one financial counseling and education support for folks. So I'll talk a little bit more about that as we go forward. Yeah, happy to be here. Really excited about this today. So let's dive right in. We got LaDonna here, so let's go, LaDonna. Our objectives, what are we hoping to accomplish today? First of all, the importance of budgeting. I'm going to talk about that first and foremost. Sounds a little odd, sounds a little like, okay, budgeting, great. Nobody loves that word, but it's really important. So we're going to set the foundation there. we're going to talk about how to set smart financial goals. And I'm not being cheeky, but it's smart. There's a reason we use that word. So we'll talk a bit about that. And then I want to talk a little bit about behaviors that can stand in the way of our success, right? And a little bit of behavioral science here. LaDonna and I are not scientists per se, but certainly we've seen, between the two of us, I think we were talking about this, we've counseled thousands and thousands of people between the two of us, in that one-on-one format. So we've seen a lot of, the behaviors that can kind of stand in the way of financial success. GreenPath really uses a lot of the behavioral science perspective when it comes to our financial counseling and it comes to products and services that we develop. So we'll talk a little bit about some of those behaviors, and that's really meant to be kind of the fun portion of the discussion. Not that the rest isn't fun, but what I mean. That's going to be the lighthearted section that we're going to talk about today. So let's dive right into the budgeting part. So what does your budget impact? And again, we talk about the foundation of your finances. I consider the budget the cash flow, right? Your income minus your expenses. What is that number at the end of the month? I consider that to be like your financial blood pressure, if I'm using a metaphor here, right? When you go to a doctor, what's the first thing that they check? And they check your blood pressure. Maybe they check your temperature now, but it used to be they would check your blood pressure first just to see how your overall health is. It's a great start to see. LaDonna, right? That's what we do, right? With the financial, isn't that a big part of what we do on that one-on-one and why it's so important?
Absolutely. Anytime that a client calls GreenPath, we're going to start with understanding where the budget is, because the budget really does impact every area of our financial life. Understanding, what that number is, like Matthew spoke about, helps us to understand how we can contribute to other areas of our budget. Specifically, our savings, our retirement, credit score, all those different things are touched by our budget.
Right. And that's the thing, and you can talk, and I'm going to start with the credit score as a big part, but right, how in the past year, savings, how much has that been magnified, right? What if I had that emergency savings that, that would have been helpful to so many people. We want to be able to prepare. And when it comes to financial goals, in a lot of cases, financial goals, that savings component is a big part of it, but it begins, right there with the budget. But let's talk a little bit more about this and the importance. I want to start with the credit score specifically. And I love doing credit score workshops and sessions. And the reason is it's just everybody's so interested in what is the credit. It's confusing. It can be a lot. But the credit score most of your credit score is directly impacted by your budget. And that's why it's so important and why I want you to take out of this today. Really, that's the foundation of everything here. If you take a look and you look at what breaks down a credit score, how it's broken down specifically, 35% your payment history, right? That's your on-time payments. Obviously, with a budget, if you have a budget that's working for you, you're going to be making those payments on time. That's the biggest component of your credit score. The second most here is the amounts owed. And the amounts owed is how much, a debt you have on your credit card in relation to your limit. LaDonna, which would you say is the one we see the most holding people back as far as their credit score out of those two? Which one do you feel that you've seen is the most?
Yeah, gosh, it's a kind of a toss up between the payment history and the amount of debt owed, but I would say the amount of debt owed. People really underestimate, how much holding a lot of debt can impact your credit score.
Yeah. And what I've seen in a lot of cases, somebody might have a 680 or 690, 700. They're trying to reach their financial goal, but there's this kind of anchor holding it back. And in a lot of cases, it's this right here, this number, this 30%, the amount of credit you have in relation to your limit. So again, directly 65% of your credit score, if you have a budget that's working for you, this should be, to your advantage. If your budget is not working for you, again, that could be causing some issues right there. So when we talk about the budget, really what we're looking at, just a simple breakdown, and what I encourage everybody to take a look at themselves is your net income, not your gross. So you want to use your net income, and that's after taxes and deductions and all that stuff, minus your expenses, right? Whatever fixed expenses you have, like your mortgage, your car payment expenses that are the same, variable expenses, they can fluctuate a little bit, right? And then those periodic expenses and debts. And take that income minus the expenses, and that's the number that we're looking for, right? Are you in the positive or are you in the negative, right? Do you have a positive cash flow where you have extra money at the end of the month, or do you have a negative cash flow where you're spending more than you make, right? LaDonna, what would you say is the trickiest thing in most people's budget? What would be, just in all your experience right there, what do you feel people struggle the most with when it comes to their budgets?
Definitely, I would have to say the variable expenses, Matt,
Yeah.
because they're not coming to us on a fixed, basis every month. I'm thinking of our groceries, of our, buying lunches out, picking up a gift for this graduation or that summer party. Those are the expenses that usually people aren't tracking, and we don't know how much we're spending, and that's kind of where it gets tricky.
Yeah. Yeah. And that's been my experience too. And really it's good to review these things and take a look. I feel like a good starting place, if you have some financial goals, if there's some things that you're trying to work for, figure out what that number is. Let's call it your financial blood pressure. That's what we'll call it, right? Income minus expenses. What is that number? And I'm going to point you to we have a shared site between GreenPath and Harvard University Employees Credit Union. There's a link down there. I'm certainly, we could provide that in the chat as well. But the idea that you can find this worksheet, and I believe Harvard has one on the credit union website as well. But it's a great place to start to see, are you in a budget surplus or budget deficit? And that will help us when we're trying to put together that goal. What other tips do you have for us, LaDonna, when it comes to the budget? Anything you can recommend for the group today?
Absolutely. I mean, when it comes to using a budget, we really want to identify our pain points. Is it that latte that you're buying daily? Is it the unexpected auto repair? Knowing what your pain points are really allows you to better prepare for any future cost. And it's a quick and easy way to determine what you're spending. The other thing would be, trying to automate your bills. Automating bill payments is easy. It's a way to set up payments, set it and forget it is what I call it. And it minimizes the mental tax that you have of trying to memorize, when your due dates are coming up. And then in terms of decluttering, I would really recommend using paperless statements. Many organizations offer paperless statements. And if you're tech savvy, also create a virtual folder so that you'll have something on your laptop so that you have all of the things that you need all in one place without having to deal with paper. I hate paper. And then lastly, tracking expenses. Because tracking your expenses could put you in a space where you are telling your money where to go, as opposed to wondering where your money went. Many financial organizations offer a free spending analysis online or via an app. And I would really recommend, if you're going to track your expenses, try to track for about 21 to 30 days. This is how you get the best look at what your money is going to.
Yeah, and another thing too, and sometimes, and this is always my experience when I was talking to people, it can be daunting, it can be overwhelming. It's like, oh, I have so many expenses. I use my debit card a lot. I use cash. I mean, everybody has kind of a different way to approach their money. Like, how do I track all this stuff? Start small. There's nothing wrong with starting maybe in an area that you have some suspicion, like, hey, it's probably, you mentioned the groceries and the food. That's been, out of all the people I've counseled and spoken to, that is a consistent theme. People generally speaking, don't have a great idea of how much they're spending in that area. When I quiz them on it, like a family of 4 or 5, like, oh, I spend $200 a month. I was like, I don't think you do. I think that's a little low. So that would be a fantastic area just to start. Let's just start tracking that expense and see where we're at there. And then, maybe that'll kind of motivate you going forward and make it a little easier in the future. So let's move to the goal side. So we laid the foundation. We talked about that's where you got to start with the budget. If you're going to have a financial goal, you got to know what that cash flow situation is. So we got the foundation laid there. Let's talk about setting some goals here. Goal setting is, as you can see, these are great financial goals here. Save more money, elimination of debt. I want to save for a home remodel. I want to establish good credit or reestablish good credit. All great goals, but they're not what we consider SMART goals. So let me dive in and tell you, I get unveil the curtain here as far as what a SMART goal is. So a SMART goal is specific. So we know what it is. It's not vague. It's not, we can tell specifically what our goal is. It's measurable. So we're able to measure our progress as we go forward, especially if this is a long-term goal. We want to make sure that we're able to measure our progress. So it's measurable. It's attainable and realistic. It's not something that, you know, we can't achieve or is beyond the scope of, you know, what we can do with our financial resources currently. So it's attainable, it's realistic, and it's timely. I wish I could have fit another target in there. That's why I have 4, but 5. So that's why you see this right here. So apologies. But timely, right? It is something, we can create the goal within the time that we're looking at there. So this is what a SMART goal is considered. And too often when we look at just a regular goal, when I say I just want to save more money, again, it's a little vague. And how do you measure when we don't have a specific there? So let's dive into that. And I think it's best, you know, I'm a visual learner. So LaDonna, let's just lay it out and let's create a SMART goal here so everybody can kind of get an idea of what we're talking about.
All right, so we have Cynthia here who has a goal to purchase her first home. So let's look at how we can create a SMART goal from something kind of general. So the first thing we need to consider is how much are you looking to spend? What can Cynthia afford right now? Next, we want to know how much do you have saved? You know, usually buying a home requires a down payment, so we want to figure out what the baseline is for that. And then, what is your credit score? We know that a part of purchasing a home is securing financing, so we need to know what her credit score is. And then, how soon is she looking to make a purchase? Depending on where you are in the market, it can take some time to actually find a house and, you know, go through the home buyer's process. All right. And then, are you planning on working with a realtor? I bring up a realtor because sometimes realtors can offer insights into property taxes, things like neighborhood associations, the best schools in neighborhoods, different things like that. All right. So let's talk about where Cynthia is. So she's decided $200,000 is the price that she wants to pay for a home, and she's got about $2,000 in savings. And right now her credit score is 700. It's a good score. And then she'd like to purchase a home within a year, which is pretty reasonable. And she has not spoken to a realtor yet. So let's get Cynthia on track for this. Let's see here. All right. So knowing that there's about a 5% down payment, it means about $10,000 for Cynthia. She has $2,000 already. So we need to save $8,000, right? So if we broke that up, that's about $300 biweekly. Cynthia has a good credit score. She has 700. So we want to maintain that by just keeping balances low and not opening up any other accounts. And then in order to really figure out where we are with the home purchase, it's going to be important to get pre-qualified with the credit union to figure out what we can afford. And then also speaking with the realtor at least 6 months in advance of the purchase.
Yeah, and that's really important. And I think, you know, again, as we kind of go through these steps, in a lot of cases, you know, it's good to use your resources to kind of figure some of the, and how you get to these goals and how you set them. We're basing this kind of in our world, right? Somebody calls us and we're you know, we do a counseling session. We kind of lay these things out for people and their action plans, you know, but it's not a bad idea even, hey, start with your credit union. And a credit union loan officer could kind of lay this out for you, right? If you're looking at this. So there's a lot of ways that you can approach it, but I think the overall theme, especially when it comes to the goal setting, is just taking advantage of the resources that you have available, because that can really help you start steering that ship there. And don't be afraid to set short-term goals. And this is the other thing, you know, with this is about a year goal, right? A year, I wouldn't say is a long-term goal necessarily, but it's great to create these kind of goals in between, intermediate goals, things like that. You see this, I like this picture because I'm a runner for one thing, but you know, you break it down into sections, you break down the goal. But this is kind of a taste of the behavioral science stuff that we're going to get into. The goal gradient theory, this is a behavioral science term. People will work harder to achieve a goal as that goal gets closer, right? So with Cynthia's goals, and LaDonna, you laid it out perfectly. We've got a savings plan. We need to save $8,000. This is how much you need to save biweekly, things like that. But there's mile markers that we can put there too, right? That can help us. And as we achieve those mile markers, that's going to help motivate us going forward. One of the issues that folks encounter a lot, especially if it's a 2 or a 3 or something like that, we see this with debt and paying off debt, right? Having those mile markers are huge, right? And it just motivates you and continues. If you have a long-term goal and you don't have anything, intermediate that you're trying to accomplish, it can be demotivating, and you can be less likely sometimes to want to follow through on that. So, for Cynthia, let's set a short-term goal for Cynthia. As you mentioned, LaDonna, talking to a loan officer or something, like going to your credit union and for that pre-approval, right? And just kind of seeing where you're at. So let's say, speak with a mortgage loan officer in the next week to see if you're on track for your goal or something like that, right? So that could be a short-term thing. Investments, right? If you're thinking of investing and you're just kind of on the fence and you don't talk to somebody, about that, talk to an expert to kind of guide you on that path, and that could be a short-term goal too. So yeah, awesome, good stuff there. So let's get into, so that's the goal, and that's what a SMART goal is. Again, it's specific, measurable, attainable, realistic, and timely. But let's look at, so we got the SMART goal, but there's things that can stand in our way, and that oftentimes is the problem, right? Know thyself. There's behaviors and things that we do, and we might not be aware of it, that can kind of stand in the way of our success. So I'm breaking out the cartoons now because we're going to have some fun with this start, right? Planning fallacy. People consistently underestimate how long things will take and how many resources they will require, right? I can speak to this myself right now, doing a bathroom remodel. I'm remodeling our master bathroom. I got to retile. Anytime I think that something's going to take an hour or 2 hours, it takes 4 hours. And the reason is I'm not an expert. I don't know how to do any of this stuff. I'm just watching YouTube videos and trying to figure it out as I go, right? But LaDonna, what can we think of in the financial world, right? With planning fallacy, how have you seen this kind of play out with people's finance?
Yeah, for sure. I think a lot of times people underestimate what it actually requires to retire comfortably, including, planning for savings and investments, and also really eliminating debt before you get to a place where you're going to retire. So we all, want to have fun right now, and I got plenty of time to think about it. But, sometimes it gets down to, we're approaching our retirement years, and we're needing to make some difficult decisions in order to catch up, as you say, because we're closer to that goal now, and we're trying to really take some actions to get there.
Right. And that's a great point, because especially with retirement, you're going from a regular income to a fixed income. And I often heard, friends, family, whoever, that, oh, I got time to pay this off. Right. I might be expecting a bonus, or I might be expecting this or that. I have time to pay this off. But again, we often underestimate. Who would have thought last year would have happened in March? How many of us had plans last year that just kind of, oops, can't do that now? Or, what happened? We talked to a lot of people that were they just didn't know. I know that was the vibe kind of in the counseling world, is there's just a lot of uncertainty. We don't know how things are going to go. We heard that a lot from clients. Like, it's just, I hope things are going to, they just want to hear that everything was going to be okay. Hope, right? So yeah, definitely a lot there. But, with this, again, resources, if this is a behavior we underestimate, use those resources. A mortgage loan officer, or, even GreenPath, partnered with the credit union. We provide a lot of advice to help people. Maybe educate, a little more education on a particular topic might help you when you go to plan that. All right. Tunneling. If it's an emergency, we can only think about the emergency. This does not seem unreasonable. Like, if I'm being chased by a bear in the woods, it's okay that I'm just thinking about that bear chasing me through the woods, right? But in the financial world, how does this play out in terms of what you've seen? Like, how do you see tunneling play out with some of our clients?
Sure. You mentioned the pandemic, and just recently, some clients may have gotten information about, going on a forbearance for their mortgage, or maybe have were in a situation where they were going to fall behind on their mortgage payment for the first time. And so they are calling, us to have a counseling session to determine solutions for that. And because we take a holistic approach, we always start with the budget. Some clients are like, wait a minute. I'm not calling to talk about my budget. I'm calling to talk about my mortgage. But
Right.
because all of it is intertwined, that is where we start. And so sometimes we have to, take the time to help a client to understand, how everything is interworked and certainly still meet their needs and help them to understand their solutions.
Yeah. Yeah. And again, that's a great example as far as the resources side of things, because you're right. I mean, I'm trying to think about saving my home. What does my budget have to do with it? Well, honestly, it has everything to do with it. Is that home affordable? Will your lender give you a modification on that loan? Because it's going to be based on your housing ratio, if I'm not mistaken there, right? Like how much, income to, the mortgage, whatever. But it's going to be based on all that stuff. So it's really important, again, to just kind of, think about the budget as the foundation of your overall finances. Because it definitely helps frame, what workout options might be available for you. And again, your credit, your savings, everything. So yeah, definitely. That's a great example. This one seems pretty self-explanatory, like a lack of self-control. Who does not have a lack of self-control in some particular area of life, right? In general, people have a hard time deciding between doing what's good for themselves in the future and doing what feels good right now. And I like the fact that on this particular one, we can point this back even in that goal, that SMART goal that we sent for Cynthia, right? Or we set for Cynthia.
Mhm.
That tax return will really help me with the down payment for the house, but I can't pass up that trip to Disney, right? So a tax return could help accelerate her goals, right? It could help move that faster. But in some cases, we stand in our own way. How do you see this kind of playing out, LaDonna?
Yeah, absolutely. So with our debt management program, we do have clients that sign up and they're maybe on a biweekly or monthly payment plan with us. And a lot of times, in addition to the tax return, there's a couple times a year if you pay biweekly that you'll get those additional paychecks. And
Yeah.
so some clients do opt to say, yeah, just let's let that extra paycheck go towards the debts and pay them off sooner. Or let's let the tax return go towards the debt and pay them off sooner. But some are like, no, I want to use that money to, you know, do something to my house, get a new piece of furniture, go on a trip. And, it's really just staying focused on those goals so that you can actually see
Mhm.
the wins that you want to see and set yourself up well financially.
Yeah. Yeah. I mean, a great example, even if you look at Cynthia's case, put a picture of the house that that positive visualization, put a picture of the house and then put a picture of that chair. See kind of which one, pulls you more at that point. And there's a lot of things, this is a tricky one because we all have this and it's all, and it all affects our finances. Coffee is a great example. I worked at Starbucks in college. Oh boy, a couple of lattes a day. I'd have my regulars come in. Yeah, you see that bill at the end of the year. But again, positive visualization, kind of put a picture of what that goal is, create some short-term goals in between, and maybe that can help overcome some of these roadblocks there. Speaking of lattes, mental accounting. People categorize and treat money differently depending on where it came from and where it's going. So a great example is vacation. How many times have you gone on vacation and spent way more money just because it's vacation and that's what you do? How do you, LaDonna, in the world, like the counseling
Yeah.
world, or even in your own, how do you see this play out?
Yeah, I'll give you an example of myself.
All
No
right.
vacation needed. I was definitely spending, a lot of money on lattes and muffins at Starbucks. I was doing this for myself as a treat on Friday because I made it and I felt like I deserved it at the end of the week. And what I was realizing is it was adding up pretty quickly to about $50 a month or so. And while $50 a month may not seem like a lot, in a year, that's $600 that I that donated to Starbucks. And when I think about what else I could have done with $600, I had to make some decisions, and determine if I wanted to get a little coffee machine in the house and
Hmm.
and try to have my lattes and get my caffeine buzz that way. But yeah, this is
Yeah.
this is definitely a common pitfall for a lot of consumers.
Yeah, for sure. And again, it goes back to the goals. There's nothing wrong with going to Starbucks and, getting a latte or a muffin or something like that. But if it is standing in the way of you achieving that goal, that's where it becomes kind of that, needs versus want type of thing, right? Is this working for me? With that $600, $50 a month or whatever it is, back in my account, be helpful towards achieving that goal. And in a lot of cases it is. So, again, positive visualization and just thinking about that goal, and is this helping me achieve? That's a great question to ask. Hyperbolic discounting. sounds like a fun word, right? People put an overly high value on the here and now and an overly low value on the future. It kind of goes somewhat kind of like what we were talking about earlier. But I'm young and I should be having fun. Right, it's discounting the future for the sake of the now. We see this quite a bit, right, in the counseling world, LaDonna.
Yeah, for sure. Can't overstate, planning for retirement and not just the
Mm-hmm.
side of savings, that also means making different financial decisions. It might mean not taking out another loan against the home, for repairs. It might mean, buying a more economically friendly vehicle as opposed to getting that big SUV you want. It also might mean, paying down your credit card debts now. We know that, with retirement, there's going to be less ability to increase your income. So we need to make sure that our expenses are low at that time so that we can actually enjoy our retirement.
Mm-hmm. Yeah, yeah. Again, it's a great example, and I think again, going back to using your resources, educating yourself as much as possible, whatever that is, and just understanding now, especially if you're on this and you're younger and you're thinking about, hey, do I want to save, but do I really want to right now? The difference between savings in your 20s and then starting savings, retirement in your 30s can be hundreds of thousands of dollars. Talking to a retirement expert, they'll probably tell you the same. So it's a huge difference starting early. And you don't know what's going to happen in life. Again, I'll point to this last year as a fantastic example of why it's always really good to plan ahead, whether it's retirement savings, whether it's emergency savings, and maybe if you're thinking about a goal or you don't quite have a goal, if you don't have an emergency savings account or some type of savings set up, just in case, I think that's a really good place to start. Right. So let's wrap here, LaDonna, and I know everybody's probably got a lot of questions, so we'll kind of run through here. So just some final thoughts. Don't overcomplicate things, right, LaDonna? We don't. Do we see that a lot? People complicating stuff. Yeah, for sure. Keep it simple. Especially with the budget. I said this earlier. Start small. Maybe just if the budget is overwhelming, just start with something small. Groceries or tracking, your coffee expense or whatever it is. Just start with something small. So don't overcomplicate it. Set one goal, a short-term goal, right? If savings has been something that has just kind of been the bane of your existence, I never can save, I'm always pulling out of my savings, set up a savings account with a direct deposit, right? And $25 or something, a paycheck goes into that savings account. Maybe that's a great place just to start developing a habit. And if you have a short-term goal that just kind of starts developing that habit, and you look at your savings statement and you got $100 or $200 in there, that could be huge. So it adds up, really does. And utilize your resources. The credit union, GreenPath, we're here to help. So utilize your resources. If you need help setting that financial goal, if you want to learn a little bit more about what is, LaDonna, you laid it out there, right, with home buying and just some of the questions that you would ask and some of the advice you might give, use those resources so that you can set that SMART goal and break it down, maybe do a short-term goal. GreenPath, I mentioned us earlier. We do a lot of this stuff, more like this conversation that we had. A little different format. It's more one-on-one. But if you wanted to talk to somebody like LaDonna or myself, who we do free financial assessments through our partnership with Harvard University Employees Credit Union. We offer free financial counseling. So if you wanted to talk to somebody about setting some goals, we could do that, and it doesn't cost anything. It's really awesome. So our information is right down there, and we're always happy to talk. That's what we have for now. So I think we could kick it to questions if we have some questions coming in. I know we're really excited to get started. So.
First of all, virtual applause to both of you. Thank you so much for sharing all this knowledge. One of my favorite partnerships is the one that we have with you at GreenPath, because as folks can see, LaDonna, Matthew are passionate. They care about helping our members, and so does everyone over at GreenPath. I've had the honor of getting to meet a lot of folks, including the president, and everyone is as caring. So please take advantage of these resources. We believe in your personal finance. As a result, we pay for this so you don't have to. This is the benefit of being a not-for-profit credit union that is here to be essentially helping all of us improve our finances. So we do have a good amount of questions. I'm going to get us started. And the first one is, what are the best types of accounts to save in? For instance, a bank savings account, an online high yield savings, a retirement account. Is one better than another?
Oh, a lot of cases I'd kick that back to you in terms of what you guys, but I mean, it depends on what it is. If it's an emergency savings account, you're going to want to have access to it just in case of an emergency. So something that you can draw off of. LaDonna, do you have an example you'd probably want to share?
Sure. I mean, definitely, I would say what Matthew's saying, if it's for saving for the future, something more like a high yield account, of course, there might be risk with taking money out of that. But if it's something like just an emergency savings, you want to get something that is going to be more minimal interest bearing, but you'll be able to have access to it whenever you need it in case of a pandemic or something.
Thank you. And a little bit of a plug for Friday's session. We have Friday Decoding the Fine Print, and we will have our CFO and a branch manager. So great opportunity to come and check that out and ask that question there if you want a little bit more detail. And the next question that I have is, my credit score is good, but I was told not to cancel unneeded credit cards because it would hurt. Is that true? I'd like to sunset a few so I don't have to worry about them.
I can take this one.
Yeah, go for it.
So yeah, in terms of your credit history, really, if you're applying for credit, lenders are going to look probably around 2 to 4 years back in terms of your credit history. Really, the length of credit history is only about 15% of your credit score. The biggest components of your credit score is making your payments on time and you're keeping your balances low. So, really, when it comes to closing accounts, you really want to make sure that if you're going to close an account, that there's not a large balance on the account, and that you don't plan to really use or try to access new credit for at least around a year or two initially.
And I'm going to do a plug for contacting GreenPath, because they are accredited credit counselors. So they can actually pull up your credit report, will not impact your credit score, and they can give you more specific information because they're looking at your credit file.
Absolutely.
The next question is, how much do you recommend having set aside for an emergency fund?
I'll take that one. So at the start, minimally $1,000 is a typical thing that we use as far as this is a great place to start. But realistically, if you're looking to build this out, 3 to 6 months living expenses is what you're looking at as a goal for that. And when I say living expenses, I mean, paying your mortgage or rent and your basic, your minimum expense, that'll get you by for that period of time. That would be what I would shoot for there.
Thank you. Do you have any tips on how to request a credit increase on my credit cards to lower utilization rate? One of my credit cards requires me to name the amount of increase I want, and I'm not sure how to determine what is reasonable based on my income, etc.
I would say you definitely want to have a counseling session so that someone can look at your situation a little bit more directly to answer that question for you. But if they're going to increase your credit score, your credit limit, I'm wondering if that is a hard pull on your credit report because they are going to offer you more credit. Because sometimes I get credit increases without having to do anything, right? I'm sure that some of the folks on the lines have gotten that too. So if they're asking you for some more information, I'm wondering how that might impact you. So I would definitely recommend speaking with a financial wellness expert to get a more concrete answer on that specific situation.
What is a simple personal finance software program you recommend, such as Quicken or MoneyDance?
Oof. LaDonna, you've probably been in that arena a little bit more than me lately. More up to date on it.
Yeah, so I'm trying to think. So because we're a nonprofit, generally speaking, we haven't been able to like formally recommend anyone, in the for-profit space. So I would say do your research, uh, do the reviews, look at the reviews, ask friends or family. But unfortunately, I can't recommend anyone off the top by name. So yeah.
There's a lot of free programs out there, but the thing is, there's always a catch, and that's kind of why we have a hard time just saying, yeah, use this or use that, because there's personal information sharing things, and there's a reason things are free when they're free. I use that in air quotes, right? So there's a trade-off there. So I think it's good, like LaDonna said, just kind of do your research on that. There are software programs out there that you could probably purchase. I know there's probably things on the App Store that you could look at paying for. But again, just kind of beware of free, because sometimes that trade-off is not worth the trade. I'll stop there.
We got it. Thank you, Matthew. I like how you said that.
Okay.
One of the things too is all of you have access as members through online banking. We actually have a budgeting platform that's built into online banking. There's also a savings module. So you can actually save for different events. You can name accounts. You can put a picture to it. You can do a timeline. There's a lot of options that come with that. And you also have total view. So you can actually link other accounts if you wanted to see all of your accounts together. And I would recommend do it through online banking. And then once you do it there, then you have access through mobile. But if that is one option that is free to you, because it is a benefit of the credit union, and no catch for that. The next question that we have is, how many credit cards should I have? I want to cancel my old credit card that's over 7 years old, but I have others, and I want to open another credit card. How long should I wait to open another card?
LaDonna, you want to take that one?
Same. I'm going to say, talk to a financial wellness expert, because they can then look at the balances for each account and versus your credit line for each account, and really discuss with you your goals in terms of what it is that you're trying to achieve with your credit. Is it that you are wanting to boost your score because you're going to be purchasing something, or can you wait to purchase something? So for something so specific, because our credit scores are all different, it's really literally a snapshot at that time. I would say definitely speak with a wellness expert, and they can tell you more in detail which actions to take.
Yeah, it's tough on the credit side because everything is so unique. It's like health and wellness. Our bodies are all different, and things like that. So just use your resources on that. I think that would be beneficial.
A couple of other questions. One that I'm going to take myself and then give you the other ones. But what do I need to do to qualify for a debt consolidation loan? I would recommend contacting our support center and giving them a call, and they can help you with that process. If you're more than welcome to reach out to me, Migdalia_Gomez@harvard.edu, and I can always follow up. And what we do a lot, and it's great that GreenPath is here, is if someone does not qualify for one of our debt consolidation loans, we will actually have them speak with GreenPath, see what can be done to increase the credit score. And if that's not an option, we'll work with you. And that's another benefit of us being here for you and to help. So definitely reach out to our support center. And if you have any questions, you can reach out to me directly, and I can help connect you with our loan department. Another question that came in, can you give some examples of financial goals for someone who has paid off debt and has built up emergency savings, but may not be ready to buy a home?
So it sounds like you have a good foundation there. May not be ready to buy a home, but it sounds like you might be interested in buying a home in the future. I think it's good to kind of know, how, going back to the Cynthia example that we did in the presentation, just kind of asking some of those questions, and you can kind of refer back to some of those questions that we would ask. knowing, how much home you want to purchase or what area you're looking in, and just kind of saying, okay, well, what would a down payment potentially be? If you built up the emergency savings, maybe that next step is a future down payment, and kind of setting up a plan there, and creating some goals around that. Maybe it's related to credit. You have debt paid off. Do you have, anything on the credit report currently that's reporting? How do you, keep that going and maintaining a good credit score for the future, just in case you want to? There's some goals probably around those two things that I can think of. I don't know if you have anything, LaDonna, you want to add to that.
Sure. In addition to that, consider saving for investments or for retirement. It's never never too soon to jump on that bandwagon. So maybe speaking with the retirement specialist or an investment specialist to determine if you'd like for your money to work for you in that way.
Thank you. And I think another question that I know has come up in the past, and I think based off of this one is a good one, is how do you prioritize all of these different goals? Like, how do you determine where to put most of your money and sort of not become overwhelmed by having such great financial plans, but then the reality of having a limited budget?
I can take, yeah. So I'll give us, so definitely prioritizing your basic expenses. Your housing is always first, be it, your mortgage or your rent or what have you. And then your fixed payments, your food and other necessities. Then comes, savings and planning for the future. And, because we are financial wellness experts, we are more based in kind of the basics of building credit and preparing for homeownership. But I would always advise speaking with a financial planner so they can talk with you about, a more holistic view of where your money is going, especially if we're talking about building assets and building for the future.
This was not planned, but we actually just put together a blog article. I think it was like 2 weeks, not even a week ago, about when is it time to hire a financial planner. So I'm dropping that in the chat so that folks have that, and a little plug too for our blog where we have a lot of additional articles, and you can subscribe if you're interested. Another question that came in is, when you say balance regarding credit card debt, do you mean how much you borrow per month or how much you let roll over unpaid per month that you have interest to pay on?
When we talk about it in relation to our credit score and that 30% that we had shown there, it's basically how much debt you're rolling over, basically how much debt you're carrying in comparison to your balances. So ideally, you want your utilization, is what we call it, to be, I'd say 30% or below, right? So if I had $1,000 credit card limit, let's say I had one credit card, it was $1,000 credit limit, I wouldn't want to put more than $300 on that card to maximize my credit score. It doesn't mean that, the financial world is going to end if you have to go above that, but just understand that your credit score might not be super high, right? Or it might not be maximized to what it can be. A lot of times I get this question when people have, and there's nothing wrong with this, but they use their credit cards for all their expenses, and then they pay it off at the end of the month for rewards and things. And there's a lot of things that, can benefit for sure. But what ends up happening is, let's say it's a $5,000 credit limit and you have $4,000 of expenses for the month. You pay off your expenses. You're like, great, but how come my credit score isn't, like what's going on here? It's because at a certain point, your credit card company or whoever is going to report a balance to the credit bureau, and that balance might be the $4,000 on that $5,000 limit. So then you have a utilization that is math, 80%, right? So 80% utilization when we should be at 30. So that's something to keep in mind too. If you use your credit cards as your regular, purchasing mechanism, probably never heard that before when it comes to credit cards. But if you use them regularly like that, just be mindful that that data will get reported at a certain point, and it might impact your credit score there.
Thank you. And for our last question is, what would both of you say would be the easiest step for people to take to sort of simplify their financial goals? Sort of one final takeaway from both of you. Oof. And as you're thinking,
what I said.
Oh.
Yeah. All right, go ahead.
As you're thinking, because I know that's a tough question, I want to remind folks that there is a survey. I dropped it in the chat. And for those that complete the survey, you have the option of putting your name if you want to be entered into a raffle for a HBCU swag box. We will not be comparing what you say with the name. So all of that is being done separately. But I will turn it back for one last piece of advice on what's the easiest steps folks can take.
I was just going to say it really, like, I started the presentation that way because it's so important, but just starting the foundation of that budget and just looking at it, go get like that budgeting worksheet that I referenced, fill that out and see where you're at. Are you in a surplus at the end of the month, or are you in a deficit? And that is a great starting point to have the conversation of, what next step we need to take for reaching our goals.
Yeah, I would have to agree with Matt. And in addition to that, understand where you are with your debts and assets, because that is also a good prediction of kind of where you want to be able to go for your future. So definitely getting that budget as a basis, and then understanding a financial worksheet where you understand where your assets and your liabilities are so that you can plan for your future.
Thank you both so much for taking the time, not only today, but always for helping support our members, for helping share your knowledge, for all the work that is happening at GreenPath and science-based work. So it's not just, oh, we think this is going to work. They're always trying, and they're always sharing additional information. And either myself or Sarah will also drop in the link that they also have a new learning management program. I don't know, Matthew, if you want to do a little blurb while I pull up the link so folks can sign up and utilize that.
Yeah. We are in the early stages of we call it an LMS. It's like a learning management system. Basically, it's courses. If you want to take some interactive courses to learn a little bit more about some of the things that we talked about today, you can find it at that link. It's just getting this started, so we're definitely interested in people trying it out and giving us feedback on that. So if you're kind of more of a self-guided learner and kind of some self-guided courses is the way you want to go, follow that link. And we're really excited to hear what you think.
Thank you. Thank you both. Round of virtual applause. Thank you everyone for joining today as day one of our summit. It's a very exciting annual event that we're very thankful to be able to bring to you all. Tomorrow's session starts at 1 p.m. It's about investing. Please join us. We'll have Shahar Ziv, who is one of our board members and HBS alum, who will be leading that one. As a reminder, everyone will get an email at the end of this week, if not Monday. We'll try our best to do it Friday, but if not, definitely by Monday, which will have all of the recording. It will also have links, including to the online learning module that Matthew just mentioned, and it will include additional information as well. Thank you so much. What a wonderful way to end our Tuesday, and we hope everyone has a great evening. Thank you.
Thank you.
Thanks for having us.